Good morning, America. We are live on the Phoenix National Network once again. Happy Halloween to all of you out there, and thank you for tuning in. My name is Richard Ciuzio. I am a loan officer here with Hudson United Mortgage. I am licensed in the states of New York, New Jersey, Connecticut, and Florida. For those of you who are tuning in, once again, we appreciate your audience. And if you are watching on Facebook or YouTube or any of those, you can also download the app free from the Play Store on your Samsung or your iPhone devices. You can also download the app on your Amazon and Roku devices too. Just search Phoenix National Network and it's a free download. So this month is October. Happy Halloween. Woo! And I wanted to talk to you today about something a little bit more upbeat and fun for a change, but also informative. And that would be the horrors, because it's Halloween month, the horrors of the mortgage industry or the loan process, things that I have come across on a personal level, out of personal experience, and some of the things that I have seen go on with other people's loans or just heard about from other people as well, word of mouth. So I'm going to dive right into it today. My information is on the board there. If you want to give me a call, free consultation. You can reach me by cell phone or by email, richard.cusey@hudsonited.com, or my cell phone, 321-634-2552. All right. So, first off, and I've had this happen to people before because people don't realize that, when you're buying a home, I mean, I would like to think that they would realize, but some people just don't understand the mechanics behind the process of qualifying a borrower for a potential home. One of the biggest misconceptions is debt to income ratio. People get excited. They're first-time home buyers. If they're buying a house and it's not furnished, what do they want to do after they get that loan approval? They want to go shopping. They want to buy furniture. You want to go to a furniture store. You need a bed. You need a kitchen table. You need a living room. You need a patio set. You need a dresser. You need an armoire. Whatever it may be, you need a coffee table. And everything looks great, right? But you're saving your money, right, for your closing costs and your down payment and your inspections and your attorney and all these other fees that are associated with the process of buying a home. So what do? You go to Bob's Discount Furniture, or Heilig Myers, or any one of these furniture stores out there, Walmart, and everything's great. And then the salesman comes up to you, or you get to the counter and you're buying your stuff, and they're like, "Hey, by the way, we'll give you an extra 30% discount if you make your purchase today with our company, a company credit card, Bob's Furniture Discount Card, or something like that." Guess what? They're going to run your credit, and you're going to open a new line of credit, and boom, now you've taken on a new expense, which could or could not, which may or may not impact your credit score, but it may or may not impact your debt to income ratio, depending on your income status. So, you have just now, if you have to run credit again during that process, and you're working with a 710 FICO score or 720, and now you've taken on a new debt, right? And the inquiry was made. Now maybe you don't have that 720 or that 710 FICO score. Maybe now you're down to 700, 695. What does that mean? That means your pricing on your interest rate might decrease, or maybe you have to take a eighth of a percentage lower interest rate based on your borrower scenario. Maybe, I've had this happen with a couple of borrowers recently. As you guys know, we had Hurricane Ida come through. Not only did it affect the southern territory of the country, but it worked its way up to the northeastern part of the country as well. And, being originally from Florida, I'm used to hurricanes. I'm used to that kind of weather. The North is not prepared for that. They're not built for that. So the flooding did so much damage up here. It flooded out cars, it flooded out basements, flooded out homes. Heck, I even had about an inch of water in the basement just because the rain was flooding from the outside stairwell and it leaked into the laundry room. And the way the house is built, right, it was on a slant. So like everything like went underneath the walls and into my bedroom. And I was watching TV, and when I went downstairs later that night, I'm like, oh, water was everywhere. I had to put down towels, I had to put down blankets, and I had it. It could have been a lot worse, but a lot of people had it really, really bad. I had a couple of borrowers who um, had their cars were completely um, flooded, totaled from the flood, from the rain, and in order to qualify for their home, right, they actually had to pay off one of these cars and omit that because they were buying a co-op. So their debt to income ratio had to be under a certain percentage. In order to help them qualify, they had to pay off one of their cars. And they did. They by paying off that car, that was like an extra 500 and something dollar a month payment that they weren't obligated to pay. So it really helped out their debt to income ratio, and it allowed them to buy this home. However, because the co-op process is so long, you know, their credit report expires. It usually expires within 120 days. That's 4 months. However, some lenders may require a new credit report be run after 90 days. And that's what happened here. And when we run their credit, not only did I see, a brand new debt, I saw 2 brand new debts for cars. And when it comes to debt to income ratio and qualifying for the co-op, even though we were 2 days away from closing, if the co-op had found out about that, they may or may not have been able to qualify for this home, and everything would have fallen apart at the closing table. 2 new debts, about $1,200. Yeah. No. If you're thinking about buying a car, if you're thinking about opening up a new debt during the loan process, please do not. It just wait until closing. It makes life on everybody so much easier. Me, yourself, the processors, the bank, everybody involved. We don't want to see you lose the house because you took on a $300 debt, that a monthly debt that throws your debt to income ratio out of the water. All right. Another personal experience kind of going through at the moment. A lot of people are selling their homes, and with the sale of their home, they're using the proceeds from the sale of their home to buy a new property, maybe somewhere out of state, maybe somewhere Connecticut, Florida. They want to get out of New York. They want to get out of Westchester. They want to get out of the city. This was big when COVID happened. And a lot of people are doing simultaneous deals. They're doing a sale of their home, and then at the meantime, they're doing a purchase of a home, which is fine. You could totally do that. And once you get paid from the proceeds of your sale of your home, you're going to use that to finish off your closing costs and down payment on your new home. However, I have a client who's potentially may not get his home that he has an accepted offer on in Connecticut because the people who are buying their house in the Bronx, they weren't properly vetted by whoever did their pre-approval. The loan had started, and when it came time to, I guess, look at the income or underwrite the file with the lender, I got a call from the realtor saying that the sale isn't going through with these particular buyers because the co-borrower on the deal has been unemployed for 8 months. 8 months. How does that happen? How do you not get updated pay stubs? How do you not get an updated income? It seems like the person who did their pre-approval, or maybe they got a pre-qual, which is different. That's stated income. It's not properly vetting your person with credit, income, assets, a whole background check, maybe they just gave them that pre-approval and didn't double check anything. So now my borrower is suffering because he has to, now find new sellers for his home. Meanwhile, the home he's purchasing is on hold, and the sellers of that home are getting impatient. So he might lose out on this deal because someone didn't properly vet their clients. So, it's our job, it's my job. I want to make sure that anybody who's interested in buying a home is properly vetted. You want to know what you qualify for, you want to know what you can afford on a monthly basis, and you don't want to be over your head. We want to make sure that you're in the best spot possible and properly educated on what to expect down the road in regards to the loan process. It's our job to educate you, and it's our job to inform you or answer any questions that you may have. We want to prepare you for what lies ahead. Taking on a home for the first time, if you're unfamiliar with the process, is a very detailed and intensive thing. It's a big thing, and it will last several months, 2 to 3 months, from inspection to contracts to buying a home, and that's a minimum. It might take you longer to find the home. So we want to make sure you're properly vetted. I want to make sure you're properly vetted. It's our job to make sure. If you have any doubts or want a second opinion, you are more than welcome to give me a call. I'm more than happy to take a second look, maybe qualify you for more, or just double check the figures. Free consultation, not a problem. Okay, so another horror of the mortgage industry is, we want to make sure that you can afford your house and your other expenses on a monthly basis. The biggest thing when it comes to buying a home are your property taxes. Property taxes are one of the only things besides your insurance that may or may go up or may go down. That is the only time your monthly payment will fluctuate. Other than that, you're going to have a fixed principal and interest payment for the life of your loan. 15 years, 10 years, 20 years, 30 years, whatever it is. Fixed principal and interest depending on your product, especially if you go conventional. All right. Taxes come into play. If somebody underquotes your taxes on a monthly basis, if you have $12,000 a year in annual property taxes, you divide that by 12, it's $1,000 a month. All right. Keeps your debt to income ratio at a certain percentage, but maybe the realtor didn't look at the property, or maybe they underestimated the taxes. Maybe you didn't do your research and the taxes are a lot more. Whatever it may be, this has happened before where taxes have become an issue. And even if it's a couple $100s a month, maybe taxes instead of 12,000 or 15,000 a month. That's an extra X amount of dollars. I can't do the math off the top of my head. That could make or break the deal. So then you got to either come up with more income, put more down payment down, or buy down your interest rate. So we want to make sure that you're at a comfortable level and good place to afford your home on a monthly basis. Another horror, buying properties as is. There are a lot of distressed sales out there. There are a lot of homes that need repairs. You might find a great home at a great price. However, it may not be so great on the inside. So always beware of properties that are sold as is, because you are agreeing when you sign that contract, you're taking the house as is. There was an instance where these people have bought the property as is, and they did the inspection, everything seemed to be okay. However, a month later, when a nice storm came through, they had about 3 feet worth of water in the basement because some of the seals of the foundation weren't sealed up. There were cracks in the pipes, and they bought the house as is. So then they had to spend thousands of dollars to get that remediated and fixed. And that was one of their first experiences that they had with their new home, was getting rid of a 3-foot flood in the basement. That's not fun, folks, please. So just be careful when you're buying properties as is. You want to make sure that you're doing your due diligence, that you have an inspector who is going to properly vet the home and make you aware of any and all concerns regarding that property. They should be listed as is, but most of the time you're going to find them with a very good discounted price in a very not so discounted area. So if you see that $200,000 home where all the homes around it are going for 450, 500, $600,000. Ask yourself why. All right. Uh, this past year, we had a lot of these, and those would be underappraised properties. They can cause headache, they can cause stress, they can on everybody, realtors, buyers, sellers, appraisers. What happens when your property underappraises? So, you want to make sure that the realtor helps find comparable sales of that property, size, scope, square footage, bedroom count, bathroom count, et cetera, when it comes to buying a home. You don't want to pay overpriced, and you don't want to pay way too overpriced, because you could run into risk of um, having an underappraised home. On a conventional loan, the bank will only finance up to 95% of the appraised value, not the purchase price, the appraised value. So on a $100,000 home, the bank is only going to finance 95,000 of that. You're going to have to come up with that other 5% as a down payment out of pocket. What happens when your home underappraises? Well, you've got a couple of options. You can definitely you can find some comparable sales that are sold. They can't be in contract. They have to be sold before the appraisal report date. And you can argue your point. Maybe when it comes to appraisals, they are opinion. If you ever have had an appraisal report and you have a PDF form, do yourself a favor. Hit Control F on your computer and type in the word opinion. You'll probably see that word about 76 times on average throughout that entire report. The appraisal is an opinion of a person. It's not set in stone. It doesn't determine your home value. It's an opinion of one man or woman who has done the appraisal on that report. And like opinions are like feet. Everybody has them, at least most people have them, and a lot of them stink, whether you like it or not. That is an opinion. Not all of them are good. Some of them are stinky. So you can argue the appraisal by finding comparables in that area within a certain radius, size, scope, et cetera, and you can argue the appraisal. That doesn't work. You can, the thing about working with a mortgage broker, like here at Hudson United, we have the capability and flexibility to take from one bank and move to another in instances like these, where maybe we find a more sympathetic appraiser with a different lender. That is an option too. Otherwise, you can try to renegotiate with the seller, maybe come down on the purchase price a little bit to kind of offset some of those costs. But if the seller doesn't agree to a renegotiation, then your third option would be to pay the difference out of pocket. Whatever the difference is between that down payment percentage and the appraised price, you'd have to pay as an additional fee out of pocket at the closing table, or pull out of the deal. Those are your options. So that's what happens with the horrors of an underappraised property. Those are your options that you have when you come across a situation like that. During the pandemic, homes were selling for $50,000, $100,000 over asking price, and the trend data did not catch up with the home values. So we were finding there just wasn't enough data. There weren't enough properties that had sold to compare these prices to. So for the first part of last year, pretty much to the end of last year, we were finding a lot of underappraised homes. Everything is leveled out now, but that was a horror for a lot of people. Another horror a lot of people don't know about is using cash. Cash is a no-no. When I say cash, I mean physical cash. A lot of people don't trust banks, and I can respect that. I can understand they don't want their money being traced. They don't want their money being tracked. Maybe they just want to keep it on hand. However, if you have thousands of dollars sitting under your mattress or in a safe somewhere in your home, and you're thinking about buying a home, and you go and make this lump sum deposit into your bank account, that's a no-no. The bank does not accept cash as a form. If it can't be sourced, they won't use it, right? So they're going to question any deposit that is more than 50% of your monthly income. So if you're making $1,000 a month, I'm just lowballing it here to keep it simple numbers. If you're making $1,000 a month, if you make a 50 a more than a 50% deposit in a single day within that monthly bank statement cycle, which would be $500 and 1 penny, they're going to question it. Where did it come from? Can we source it? Can we paper trail it? If the answer is no, they're going to pretend like that money is not there. I've had some clients. This is big with the Hispanic culture. In their culture, they called it a tanda. It's referred to as other names in different cultures. It's like a potluck, right? Everybody contributes to a pot of money, and it's usually between a group of close neighbors or family members or friends. And when somebody in that group has a big life event coming up, they give it to the person who needs it the most. Maybe they're having a baby, maybe they're getting married, maybe they're buying a home, right? Well, in this case, they were buying a home and they got like $7,000 worth of cash from this Tanda potluck thing, and it couldn't be sourced. So if they had $10,000 in their bank account and 7,000 of it was this Tanda, we couldn't source it. And the bank said, we can't use this money. Now they're $3,000 instead of 10. They needed $9,000 to bring to the closing table. They were $6,000 short. So cash is a no-no. If you've got cash and you're going to use it, we had to get a gift. That's how we offset it. We got a gift from a relative. Luckily, they had the money to help out. It was a monetary gift. They're, so that is don't plan on using a bunch of cash if you're buying a home. If you're going to think about it, I would start little by little, slowly getting into your account over time. So there's no red flags raised. Retirement funds as an asset for down payment and closing costs. A lot of people think, oh yeah, I've got like $200,000 in my Fidelity account, in my IRA, in my union pension, my teacher's pension, whatever it may be. You got to find out the details on what you can or cannot take out of these retirement funds. A lot of retirement funds, some of them will, like a pension or something like that, they may or may not allow you to take out one-time distribution, no penalty, for the purpose of buying a home. However, with a lot of retirement accounts, they may only allow you to take up to 50% of your entire balance and as a loan. So if you get $100,000 and you plan on using all 100, they may only allow you to use 50%. So beware. Beware of the retirement funds. Talk to whoever your retirement account holder is, whether it's Merrill Lynch, Fidelity, Charles Schwab, anything like that, your pension, your New York pension or teacher's pension, your union pension. Talk to somebody, talk to your account rep, find out the details, find out what you can take out. Okay. Be prepared. We don't want you to think that you can take out 100,000, 100% of it when you can only take out 50. Closing costs. You want to make sure that you have the money ready at closing by the time it comes. It's actually going to be one of these conditions that is on your approval when it comes time to doing the loan. We got to verify that you have the funds in the account to go to closing. If you don't have that money ready at closing, you could be in default. You could forfeit your deposit, which is, if you're putting 20% down on $100,000 home, it's $20,000, folks. That's a big chunk of change. Just think about the people who are putting 20% down on an $800,000 home or a $600,000 home. That's even bigger chunk of change. So, you could be in default. You could lose that deposit. You may even face a lawsuit. So make sure you're financially prepared for your closing costs. All right. Disappearing acts. Just kidding. There have been times where things aren't listed in the contract with the sale of the home and stuff ends up missing. Light bulbs, Sheds. Yes, sheds, a whole shed. People have taken the shed. It wasn't listed in the contract. Oh, we're going to take this. We're going to take this. We're going to take this. Toilets. You've seen people take toilets out of the home because it wasn't negotiated in the contract. So anything and everything that you expect to have in that home when you're ready to move in, make sure you and your attorney go through this contract line by line and point out what you expect to have in this house when it comes time for you to get your keys at closing and move in a month later or days later or weeks later, whatever it may be. You don't want to end up with not having a toilet. Trust me, it's or whatever it may be. It's not fun. This has happened. Otherwise, I wouldn't be talking about it. Um, and then one of the other things too is closing costs. Like I've been saying, it's our job to educate you as a borrower on what to expect. When I do closing cost scenarios for my clients, I do a line by line itemization of the costs that are involved. Is it set in stone? No, but it's a very good tool to use and guide my clients with when it comes to these closing costs. I can only point out what is inside the loan, right? However, there are costs that are going to be excluded from the loan itself. Moving costs. If you don't have a bunch of family and friends to help you move, you might need to hire a moving company. So that's a cost that you're going to have to incur. Storage unit, if you need it, or if you don't need it. Inspections, you're going to have an inspection. The more inspections that you get done within your home, like a radon test or a termite test, you can expect the cost of that inspection to go up because obviously it entails more work for the home inspector, or maybe you have to get a different service. Maybe there's asbestos found within the inspection. Now there's remediation involved. You got to get rid of it or remove it or encapsulate it. Radon test. I know there's not too many reports of radon, but it does exist and it is out there. And for the safety of you and your family, if you decide to get a radon test, personally, when I'm buying a home, I'd like to make sure there's no radon there. But this is a cost that that is outside the loan that won't get financed that you'll need to pay out of pocket. Another one would be, I was just thinking of brain fart. Radon, termites. I can't think. Anyway, attorney fees usually paid out of pocket. You're going to pay your attorney to represent you on this transaction. That's going to be paid. You're going to pay them a certain fee, $1,000, $1,200, $1,500, whatever it may be, to represent you on the purchase of your home. I never remember now. Lead-based paint. What if you get paint from like the 40s, the 50s, the 60s? You're going to have that removed, taken care of. That lead-based paint can be dangerous. So, that might be another test you want to have done. So just think about all these outside costs that you have to incur when you're moving. All right. Because it's not going to be outlined on the closing cost scenario or the loan estimate that you get from your loan officer or your bank or lender. And then last but not least, this is a big one. A lot of people try to play the system. And when I say play the system, I mean that they try to claim 2 primary houses, 2 secondary homes. Can't do that. They want to buy an investment property on the first time around. Probably not going to happen. You're going to have to find a non-QM lender or something like that. However, if you're a first-time home buyer and you're making buku bucks as a doctor, lawyer, whatever it may be, you buy a primary residence. And then you want to buy another property a month later as an investment or a secondary primary, it's not going to fly. Some people have multiple properties and they want to rent. They're renting out like 2 of these properties, which I've had happen before. They're renting out one of their properties and they're like, oh, I want to refinance my other property, but to get a better interest rate, I'm going to move back to the other unit and make it my primary and claim it as my primary. Then they do a refinance, which is fine. You could do that, which is fine. So they move back. They finish the refinance, and then as soon as they're done, like a month later, they're like, okay, now I'm going to go back to the other property. I want to refinance that as my property as well. Once one of those lease agreements is up, like, oh, we got a vacant unit. I'm going to move there, and I'm going to claim that as my primary and try to do a refinance. No, you can get in a lot of trouble. The loan officer or the bank can get in a lot of trouble trying to do this, especially if you go with a new lender. There's something that's called there's a fraud guard run on properties, on people. The banks have information for this. If they see that you've done something within a certain amount of time, they're going to red flag it. The institution can get penalized, the loan officer can get penalized, and the owners of the home, they may or may not get their mortgage assumed by the bank, by the original lender, by falsifying your information and falsifying your application. That is a no-no. A lot of people try to play the system. Don't play the system. Just be honest. Honesty is the best policy. When you guys are talking to your loan officer, you should treat him or her like your attorney. It's client privilege information. It's not going to go anywhere. It's going to stay inside the circle of trust, so to speak. Right, Fokker? Right? So that's where it's going to stay. I'm not going to tell anybody, but it makes the loan process easier if we know what's going on with your situation moving forward. It gives us the best chance to prepare and qualify you as a borrower. So please don't try to play the system. We'd hate to see you lose your house, among other things. So, in a nutshell, that's pretty much all I have. Though it's quite a little bit. That is, all of these items that I have gone over today have either come from personal experience or other people's personal experiences. And I just wanted to shed some light on the situation, on some of the horrors of the mortgage process and buying a home. Once again, my name is Richard Ciuzio, and if you have any questions or want a free consultation, I'm more than happy to help. You can call me on my cell phone or shoot me an email. I want you everybody to have a very safe and happy Halloween, and have a great weekend. Thank you so much.